Welcome to our special guest, Julian Hanna from Perth. Thank you very much for making the time to be with us today.
Well, thank you very much, John, and good morning to you. And look, I'd like to make a special welcome to any Artemis shareholders who may be dialing in.
That's us included at Lowell there, Julian. So thank you. So the webinar will break it up into three sections. Firstly, a little bit of chat about what's happening in the resources, the junior resources market, in the market prospects section, and we'll get Julian to provide some commentary, particularly on the copper space. Then we'll turn it over to Julian to discuss his lifetime of discovery, and are really looking forward to hearing some of the secrets and some of the things he's learnt along the way in how to discover the big valuable deposits. Then we'll get a little bit from Julian about what he's up to at the moment and what's getting him excited. And then hopefully, as mentioned, we'll have a bit of Q&A. This morning's quick market prospects chat, it's called You're Fired, the fuel igniting the junior resources sector. Okay, you're fired. So Trump would like to fire both of those people on the screen, both members of the US Federal Reserve Board of Governors, obviously Jerome Powell on the left, whose incumbency, I think, finishes in May next year. Trump would like to get rid of him before that. And then Trump has purportedly thinks he has fired Lisa Cook on the right there, a member of the US Federal Reserve, but she's fighting back through the courts. So pretty messy stuff. The impact of that is really that Trump is trying to replace these more independent members of the Federal Reserve with members that might be more amenable to cutting interest rates. It's interesting, we had the Jackson Hole Talk Fest in the US a couple of weeks ago, and Jerome Powell actually was interpreted to open the door to interest rate cuts from what he said there. And so there may be interest rate cuts anyway without Trump's interference. What happened this week? We saw some labour market data in the US come out, which indicated a weaker labour market, which then the probability of a Federal Reserve rate cut jumped to almost a certainty, 96%. And at the same time, the US dollar gold price jumped to $3,570 an ounce, quite a remarkable number when you say it out loud. So there's quite a close correlation between interest rate cuts and the gold price. And if you look at the equities, the junior resources equities, you can see this is a chart in the last 6 months of the Australian junior resources sector, a 26% uplift over the last 6 months, and certainly, getting steeper in the last few weeks as interest rate cuts look to become more certain out of the US. And then possibly more importantly, this is the North American or Toronto Stock Exchange Venture Exchange Metals and Mining Index, so the juniors in North America, and that's up 55% over the same period. And look, when money starts coming back in North America into the sector, then things can really take off. So all looking pretty positive, and we certainly have had a great run. But to put the equities into a broader context, this is the last 25 years of the Junior Resources Index in Australia. Certainly from a low in 2015, we've done very nicely. But compared to 2007-8 and 2011-12, we're still well below the peak. And if you inflation adjust it, then there's still a long way to go to get into anywhere near record territory. So very positive stuff, particularly with that tailwind coming out of the US and in terms of the Federal Reserve. And also another interesting thing that's sort of underlying this is the inflationary impact of the oil price is really moderate. The oil price, in the mid $60 a barrel, inflation adjusted terms, pretty run-of-the-mill oil price is not pushing up inflation, which would mitigate against interest rate cuts. So now I just want to quickly turn to copper and bring in our special guest, Julian, just to give us a couple of comments on the copper discovery story. And here's a slide from BHP and Minex Consulting showing that copper discoveries are getting smaller, they're getting deeper, and what's not on this chart is they're getting lower grade. And you can see right at the bottom of the chart below, a kilometre deep, you've got resolution, which there's another factor limiting new supply of copper, and that's permitting. So the Resolution could be the biggest copper mine in the US, but it's been tied up in permitting for the last 25 years. We saw the leaders of both Rio Tinto and BHP, who own that project, in the White House last month, trying to discuss with Trump how to solve that permitting impasse. But that's another factor which is holding back copper supply. So Julian, just in terms of exploration for copper and discovery of copper, any insights from you as to, sort of nuances on that theme?
I think so, John. I mean, that's a great slide. And, the decline in grade is a big issue. And, copper really is the ultimate critical metal. There's no substitute for it. It's not like nickel, where there's a lateritic nickel kind of alternative coming out through China and Indonesia, but copper doesn't have that. Another way to look at it really is it's been explored for and mined for longer than any other metal. It goes back to the Bronze Age. So, anything at surface has been found or would have been found, in history. 4 types of deposits. The big porphyries, of course, huge contribution, particularly Chile, Peru, North America. They've sort of underwritten a lot of the requirements for copper for a century. The sediment-hosted belts, generally in Central Africa, DRC, Zambia, dominant producers there, but there's something like only 7 copper belts of sediment-hosted style of mineralization on the planet that are known about. So there needs to be more work, more energy, more time, more money going into those types of deposits. And if you look at the copper majors, if it's BHP, Rio, Teck, they are very focused on copper and its future and how they can build on their current declining productions. The third type really is sort of polymetallic, the VMS style that is common to sort of Canada, central parts of Canada, Ontario, Quebec. But again, long history there, and they're metallurgically complicated, and the easy ones have gone probably. I'm always an optimist, so I'm not saying they've all gone, but the best years are probably behind. Then you're sort of left with the last type, which is a big focus here and on this map, the Olympic Dam and the Karratha, the oxide copper gold deposits. These are the ones that are usually at depth, as they show superbly here, below 400 meters of cover in the case of Olympic Dam and IOCG. They've got an iron component, and they're generally explored for, and that we'll be talking about is one of the focuses of this little company that I work for called Artemis Resources. But that looks to be the future of copper, and it's getting deeper by the day. So it is a very interesting situation that copper and the world is finding itself in.
Thanks, Julian. Just one last slide on copper. On the right-hand side, you can see, on the demand side, it's inexorable growth in terms of demand. And then a forecast from Bloomberg on the left showing that they're predicting a potential 6 million tonne per annum shortfall by 2035, which is very significant given, the market is only about 27 million tonnes at the moment. Just before I turn it over to a special guest for his slides, just a note, next webinar next month, Rob Waugh, formerly of Musgrave Minerals, will be talking about gold on Q. So thank you very much. I'm going to just turn it over to Julian to tell us about his career, the ups and downs, and the learnings that he's had.
Yeah, thanks, John. To everyone on the call, what John didn't mention, I've just clicked over 50 years as a geologist, so I'm not going to bore you with details on that, but just this one slide and the next slide, just 2 slides here to try and show different roles I've had, but in a context of where the markets and where the world has been in terms of resource at that time. So it goes way back to the late 1970s. Aquitaine Minerals is an oil company, ironically looking for oil in the Bonaparte Basin up there near Kununurra, right straddling the WA Northern Territory border. The geologist mapping the southern edge where this sedimentary basin outcropped tripped over galena mineralization, fresh, sticking out of Devonian reefs that had been no prior exploration. That was sort of in the mid-70s. I joined as a rookie geologist there with this fine bunch of guys on the left-hand side. It was a great adventure. The French typically didn't bring their chef across with them into the country, but they brought their drilling rigs. And it's interesting to note that even then, amongst 4 people, I hope you can see that, amongst 4 people on the drill rig, all Frenchmen, there's one hard hat no safety boots, no PPE gear. These were the days when those sort of things didn't really get front and center, but everyone survived regardless. And it was a great learning experience for me, and a crash course in geology and exploration from those seasoned veterans of this area. And the 1980s and 90s, this was the sort of the startup really of the WA gold boom, really driven by CIP technology. And I had a couple of big stints in there. One was with Forest Gold, which was a gold company that was spun out of CRA, which is now, of course, Rio, with all the smaller gold assets that they had come across. They didn't know what to do with, so they formed a company called Forest Gold. I ended up as the chief geologist there. We ended up mining Tower Hill and a small 20,000 ounce a year mine. It was one of the early CIP efforts. And I heard Genesis the other day talking about Tower Hill, which is just north of Sunzagwalia and Leonora there, as now a world-class deposit, and they're going to chase it underground. So that's great news. GeoPico, Pico Wallsend was the parent company. And very early on, we got involved in the Peak Hill gold mine up north of Meekatharra. It was a very high-grade historical, very rarely for 1890s era gold mining. It was an open pit. It was half-ounce average grade, and there were some spectacular intersections in the first round of drilling. And really what the 80s and 90s became was it wasn't that difficult, to be perfectly honest, to find a gold deposit. You drilled under old workings. The old timers had done the geochem. They'd found the surface showings of the gold. They'd mined the high grade and left a lot behind. And then CIP sort of really was able to produce a very portable, in a sense, sort of processing option. So great success. And many of you will be aware of that, of course, that probably every year from mid-80s to the mid-90s, there was at least a 1 million ounce discovery somewhere underneath old workings in Western Australia particularly, but carried into Queensland, of course. End of the 90s was a pretty tough one. That was a global resource recession. Everything went downhill. All the commodities, geologists were sort of, and exploration stopped. Geologists were unemployed. Used to gather once a month in the pubs around Perth and sort of console each other and think of ways to make money. I hooked up with a guy called Terry Grammer. He's a bearded one in the centre of the page here. And Terry had just been recently very successful with the discovery with Jubilee Mines at the Cosmos nickel deposit, and he was kind of regarded as the nickel guru. Simultaneous with the downturn in the late 90s and early 2000s, there was also the laterite nickel boom too. Just remembering that Murrin Murrin, Twiggy Forrest was talking about producing nickel there $1 a pound through the Anaconda days, and nickel was sitting about $2 a pound, going nowhere for a while. We got very lucky in that with Terry, we teamed up with a guy called Terry Streeter. Terry was a complete, passionate nickel guy. He'd made his first money when he landed as a 10-pound POM from back in the 1960s out of putting money into the first nickel boom, and he never forgot that. And he got right behind the company, and on the left-hand side, you'll see the board. This was a photo from the prospectus there, the IPO prospectus in July 2000. We listed. The guys next door were from Patterson's. Some people might recognize Aaron Constantine there. Just got us over the line, raised $3.5 million. Nothing really happened for the first year. We had 5 or 6 nickel prospects. None of those really turned out to be much, but in 18 months after listing, Terry cut out of the newspaper a small advertisement for gold prospects, has had some past nickel production, and we thought, well, this is a bit interesting. Contact the liquidator or the receiver manager, I think it was called, for this Canadian gold company. Pretty bizarre. Only 3 companies answered it. 2 of us bothered to go and talk to them. We went out to site, and the outcome of that is that we ended up with a whole nickel belt, 8 lawyers later and 13 agreements, etc., etc. We ended up with a Forrestania nickel belt, which had been mined historically by Outokumpu, and then it became a gold project and through a convoluted way. And, it took a lot of effort to get to it, but it happened. In the middle there, you can see the exploration team. there. These were New Exco consultants, and just a fantastic team. They almost came with that. Well, they did come with the project, so we had a ready-made project. Within, I think, 15 months of buying that project for very little money, we'd made a major discovery called Flying Fox, and it's still one of the world's highest grade and larger highest grade nickel sulfide deposits. Terry Grammer with the beard there, standing beside this gentleman here, and then the mining kind of proceeded from that. And I'll come back to that whole Western area scene a little bit later. It's just such an unusual situation for the geologists, a very exciting era. I stuck with that for 12 years, and then 2013 joined a small, really defunct company. Miles Kennedy was the chairman, and he sort of left and handed me the keys on the way out. And interestingly enough, had a small holding in Botswana. We got quite interested in that. And simultaneously with that, Discovery Mines, some of you might have remembered or invested into that, they went into receivership in Botswana. They built a large processing plant. We're heavily geared. We're trying to mine and process oxide copper from open pits up in the northern end of what's called the Kalahari Copper Belt in northern Botswana. We were able to team up with a company called Metal Tiger. We acquired all of the exploration tenements along the strike from those original oxide pits that were being mined by Discovery. And we got, again, very fortunate in timing and support from some remarkable people in the UK. We listed in the UK, that's in the middle there. Our exploration manager of the day, I don't want to leave him off here, but he's on the left-hand side below that word mod. Guy called Jans van Rensburg, just a champion guy and one of many that were in that really special time at mod. Sandfire came along soon after Christmas Day, I think on 2018 and 2019, put an offer on the table. They were winding down at the DeGrussa mine. It had a sort of a finite deadline, and we kind of brushed that off, and the language I suggested to Carl wasn't probably what I need to repeat on this webinar, but we didn't encourage that at all. We went ahead and kept on doing what we're doing, which was driving two copper projects towards development and feasibility studies. At the end of the day in October, Sandfire did buy out mod 100%. And just to show that it's not all serious wall-to-wall transitioning type of handovers here, this was 3 people on the left with a mod team, and the 3 people on the right with a Sandfire team. And I think this was just after the whole deal was done, and everyone was probably pretty relaxed about that. Our shareholders, particularly, just a lesson I learned from that was that the shareholders, what Carl Simic did was really quite sensible, I think, and in that he offered cash or shares or a combo of both. It wasn't either or and like it or leave it. And the shareholders liked that. It sort of gave them a choice and an option, a bit of respect there as well, I think. So the phone was ringing hot, Julian, I think we should accept the deal. So that's how it happened. I transitioned for a couple of years after that into Sandfire. Sandfire, an incredible outfit, highly professional, top shelf, really, and $5 billion market cap company now for good reason. And then just in the course of this year, I've joined Artemis Resources here. We've got 2 projects, which I'll touch on a bit later, which I'm particularly enamored with, and you may see the reasons why. Beside me there on the right-hand side, bottom right, is our chief geologist, a guy called Oliver Hurst. He's a champion, a rising star, and he and I sort of form the core of the exploration team. So that was probably a bit too long on that part, but I'll move straight on. Timing's been very important to me and others. Many other people presented in this webinar series to talk about timing. You can use all the best science, all the best systematic exploration, but often it comes down to luck and timing. And I looked here at nickel, copper, and gold prices over 25 years. That's from when Western Areas listed, because these were sort of relevant to Western Areas, and then MOD and now Artemis. It just sort of shows that in 2000, no one saw China coming. 2001, no one saw China coming. Very few analysts talked about China. They did after the event, but that green bar is just trying to show that this was the sort of the rise of China, the GFC in the middle of that. And by then we were, in the case of Western Areas, we were very close to Jinchuan, and we listened to them about where nickel was headed more than we listened to metal analysts in Australia, because they were, the largest nickel producer and smelter and refinery and core part of stainless steel as well. So and a fully integrated kind of nickel to stainless steel industry. So we spent a fair bit of time in China understanding that. When GFC came along, it took a couple of steps and nickel just bottomed out, and we headed up to Shanghai, spoke to the chairman. He said, $4 nickel, Julian, it bounced off $4. It will bounce, and it did, and it bounced back up again. So anyway, nickel was a good proxy for China, I think. It's driven by stainless steel, that first kind of boom. I'll just call it boom number one. Then we kind of ended up in a bit of a recessionary period there, which carried all the way through into the copper as well. And this sort of current boom, if you like, boom two, for want of any better name, it seems to be more sustainable and on the up and up. It's don't know where it's all going to land, but that's where we are today. Copper sort of mimicked. I should say, sorry, that December 22 onwards, nickel price started to fall away on the back of that Indonesian laterite production out of Sulawesi there. Copper, there is no substitute that I'm aware of anyway. Others might think better. And there's really a lack of any material copper discoveries or new supply. Things that are going to have an impact, 3 or 4, maybe 500,000 tonne per annum copper. That's what's needed. That's what's not out there at the moment that I'm aware of. And the people will be far more knowledgeable on copper, I should say, than me. So I'm just, cautious here. Gold doesn't follow anything of nickel and copper, really. It's got its own plan, nothing new to anyone who's listening in on this call here. Interestingly, for Artemis, first resource and only resource so far from the Carlo deposit, which is our current sort of startup project in a highly mineralized area, and I'll touch on that later. That was priced at $1,650 US an ounce, now sitting at more than double that. So gold has actually really outpaced sort of inflationary costs, in obviously nothing new here at all. A lot of the production expansions we're seeing, I think, are from lower grade ores. And I also think too that, there's need to push into new frontiers for both gold, but also copper. And in our own little way, that's what we're trying to do. So that's where I am with that. What makes successful exploration teams? I'm just going to go back to this slide here. This sort of group of companies here, which is so different, offshore oil company sets up a team in Perth, just reports back on a monthly basis. Forest Gold, great little story. 3 mines came out of that, just very close to sensibly. CRA spun it out and put in a guy called Rod Shepherd to run that. And he just managed it on a Perth scale, and kept close to it. It's important that management and boards keep close to their exploration teams. That's, to me, a core requirement. Geopico was sort of run out of Melbourne in St Kilda Road there, Pico Wallsend, but still had a pretty solid history there. Western Area is different. The board there on the bottom left, on the middle left there, great guys, very much behind the company, got up to site as often as they could. We were very lucky in that Forrestania is only 400 k's east of Perth. You were able to fly out there. We had Otokumpu who left us a lot of infrastructure. A wonderful airstrip was just part of that. So we're able to fly out there in a day and back if necessary, if there's a good discovery there. And that was just, but that involvement of that close involvement of the board and everything, and just being up to speed with everything. And then the informal discussions that were sort of encouraged or just happened, that need to be encouraged. Geologists talk to geologists like there's no tomorrow, you know, on swapping ideas. And to me, that's very important. That's the quickest way to get to a mine. You can get all the reports, all the PhDs, all the strategic meetings in the world, but at the end of the day, the geologists are dealing with the data every day, every hour, every day. They kind of know what's best, you know. So anyway, that's my thoughts. Mod, different here that we had an all Botswana team. Fantastic guys. I'm deeply connected to Botswana. I'm actually a resident of Botswana. If I want to go live there, in theory, I could, but that's not going to happen. But just a fantastic country for anyone ever gets a chance to go there. So I think I'll skip significant challenges facing junior explorers. I think, you know, that's well understood. Funding and the cornerstone investor is the best outcome, and we had that in Terry Streeter. So that's about all I can say there. And, you know, Terry used to tell the finance director, Tim King, who's and the company secretary, is a wonderful guy. He said, Tim, stop, don't worry about the money. And that would make Tim worried all the more. So very, very interesting times. So Western Areas, the top left here, hopefully you can see this. This is the Discovery team, the New Exco guys, well known around town here for nickel. And we inherited them almost with this amazing project. And I should say this was a whole nickel belt. I think it was 80 kilometers long. There were 34 mining licenses. It was all permitted. It was, and had tailings dams and from the Outokumpu days. So anyway, they walked away after mining for several years, just 3 or 4 years ahead of the good fortune of Western Areas being able to acquire this project. They mined a small thing called Flying Fox, a small mine, top left, it's Outokumpu Flying Fox mine, says here 94 to 97, 250,000 tonnes at 3.2% nickel. They then hit granite sitting underneath it, and they drill about 15, 20 holes, stopped in granite, thought that's the end of it. You know, granite, there's no nickel in granite. I'm not going to go into detail here, but they did drill a hole about 400 meters east of the old mine, did a downhole EM survey, picked up a very subtle EM conductor at the end of that hole. Kevin Frost, the guy on the right, said, John, I think we need to drill this hole, you know, re-drill it. Well, okay, Kevin, go for it, you know. And bingo, T1, it was called, T for target here, got it in the first hole, 21 meters at 7.6% nickel under the granite, you know, unheard of in geological thinking here. And that was really a trigger for a mine opening only really 18 months from the discovery hole. We started the decline. It was opened by the Minister for Mines, great fanfare, and it was very exciting times. But that was too small and was designed to mine T1 and a thing called T0, which appeared above T1 actually. So to go backwards in the numbering sequence there. Then it's funny how you miss things, but we knew granite had stopped Outokumpu. Well, T1 was stopped by granite again. So we stopped, okay, that's it, all there is to it. And then there was another EM survey done down another hole, and it detected another EM conductor, and this thing was stepping off in sort of 200 to 300 meter bites off to the east. You can see as we got deeper. Anyway, from the mine being opened in May, just 3.5 years later, this thing had been chased all the way down to 1,500 meters. We had drilling around the clock, multiple rigs, and it was a very exciting time, and it just peaked during the China boom when nickel really took off. So the best intersection is certainly one of the best in the world historically, 78 meters at 9.3. It was blatantly a director special. It did run down the T5 deposit, but T5 was a spectacular high-grade body sitting under granite. We had to drill 500 meters through granite to get to it. That shaft you see was conceptual. That was never built, and you'll see it on lots of deep mines below a kilometre depth. People will put on a shaft. By the time management figure out the cost, they tend to just keep the decline going, and you'll see that in numerous mines in Western Australia. So the shaft was forgotten. We just kept on the decline. That mine was originally a 5-year mine, then we pushed it out to 10. I think it clicked over 17, 18 years when it finally ended. So the geology of this is breaks all the rules. It doesn't fit anything in Kambalda, which is a sort of conventional nickel thinking, and that's where the 20 years prior to this, where the nickel discoveries were made, and that was the first nickel boom. The geology here quite different. It still defies logic. The rocks on the left-hand side and that yellow are over 3 billion years old, 3,000 million years old. The rocks on the right are the first greenstones that you see in the Yilgarn Craton, intact more or less, 2.7, 2.6. So there's the nickel is sitting on a time break on a major structure. There's, I don't want to get too carried away on that. Anyway, I'll move on to the next slide. So then, while we're very involved in Flying Fox and drilling it out, there was another situation to the south, 6 kilometers away. There was granite outcropping on the surface, and there was a very subtle geochemical response on the edge of the granite. There'd been holes drilled right up to the edge of the granite. Everyone thought, okay, well, that's the end of it. So eventually, we put a hole through there on a very, very subtle EM anomaly, which a guy called Bill Aman had sort of identified, and drilled this core in the top right-hand corner. It didn't look like anything we'd seen at Flying Fox, and it sat in the core yard for at least 4 weeks. The chief geologist in the core yard there, Dave, he said, "Oh, Julian, I don't think there's much here, mate. I said, "Well, Dave, you might as well assay the core anyway, just in case." And anyway, that was the spotted qual discovery hole, 6.2 meters at 4.8% nickel. So lesson learned from that was, just because you get typical nickel sulfide mineralization at Flying Fox with fabulous grades, doesn't mean to say the next one's going to look anything like that, and it didn't. And spotted qual was an extremely valuable mine, and just kept on going, as initially as an open pit, and so anyway, jointly between Flying Fox and spotted qual, Western Areas was producing about 25,000 tonne of nickel in concentrate a year. So that put us as an underground mine, I think, second or third behind BHP, basically, Nickel West or Western, so it was quite substantial. The next slide shows that we had 2 customers really at the end of the day. We started off with Norilsk toll treating, but shifted to BHP, and they had an option to buy 100%, and they didn't take that option up of our nickel. So we offered it to Jinchuan, and anyway, so there's the processing plant, the trucks that the Con shared, and this is the first shipment to Jinchuan in July 2010. Big moment. Half-height containers, that was a pioneering sort of way of transporting it to China. And then it ended up in Jinchuan in Gansu, right out in the western part of China. It's a fascinating area. This is the major smelter refinery for China. And that was just a great relationship. The payment terms were good, the people were fantastic, and the relationships, just went on and on for years. Interesting enough for history, people that up on the hills in the background there, so Yinchuan Mountains here, there's actually Roman era burials there, all facing back to Rome, and a small Roman settlement was here. So this was the end of this is the Silk Road, one of the main axes of the Silk Road here. This was like the last centurion. This is as far as they ever got. And they would no hope of ever getting back into Italy again. This was it for them, back to Rome. And they became mercenaries for the Han Dynasty in about, I think, 100, I don't know if you can call it AD anymore, but in the current era. So anyway, it's a very interesting area of history. Jinchuan became a major, just the 2 mines at Forrestania were a large part of China's MOD. This 2013, I joined MOD. We started off with a tiny little holding. The eastern part of the belt in green in the top left had been held by a company based in Brisbane called Discovery Mines. They mined a number of pits called the Basito pits. And then it came up for sale as a package of the green and most of the orange to the left-hand side. A company called Kuprick Canyon Capital bid for this, and through the government and through the liquidator, we approached the both of those parties and said, well, you know, you've got a copper belt here, which runs through northern Botswana. From the top right, in the top right corner would be roughly where the Okavango Delta is, a town called Maun, which is a major tourist attraction. Anyway, so what happened was that we teamed up with Metal Tiger, a UK company. They had some money. This was again through Terry Grammer, effectively, just by chance meeting, really. And we teamed up with them. They put in the money for us to make an offer to acquire the exploration licenses, which those sort of pinkish colours. And that was accepted. And one of the reasons was we argued that it's such a valuable part of Botswana here that it diversified the ownership. It wasn't just an American company, Cooper Canyon Capital. It was a UK company funding an Australian company with a mining kind of background. And so anyway, so we got lucky on this. We got this deal over the line that was about 2015, early 16. Terry and I and Jacques, the exploration manager, sat around. We came up with 10 targets, T1 to T10. I mean, nothing very original here, just T's again. T3 turned out to be an absolute cracker. It was discovered below a one-off isolated copper soil anomaly of only 28 parts per million. And below that, the discovery hole, Jacques phoned me up in the middle of the night. Julian, he was so excited, you know, wake up, you know, and assays just come in 52 meters at 2 point, just missing it under that screen, but 2 point something percent. Copper, shallow, and so it was game on. Mateo, as it's now called, Mateo is a Setswana word. It means sort of foundation. And that was school kids at a town called Hunzi down the southwestern corner here of Botswana. That they came up with a competition driven by a country manager. It's a great idea. And anyway, that's where Mateo came from. So now Sandfire is mining Mateo. And it's after their acquisition of MOD, and just announced a few days ago their annual production for this last year has been 52,000 tonnes of copper, 2 million ounces of silver, and their C1 costs $1.37 a pound. So, you know, it's a fantastic project. The highway on the left-hand side, by chance, runs straight through along the axis of the copper belt for about 300 kilometers, and then we jumped the fence into Namibia, picked up a lot of ground there as well. It's all sand covered. It's covered in cattle farms. The pink area is largely cattle. The green area is largely not cattle. It's just too sandy, too dry. And we think that is one of the reasons that all that area in pink was never discovered, because there was no surface expression or geochemistry. When those early mines were found at the eastern end of the copper belt, they were below hundreds of parts per million copper soil anomalies, because the magic kind of ingredient for hiding the copper in the southwestern part of this copper belt was calcrete. So if you go out there, you'll see wonderful cattle, a highly sophisticated cattle industry in western Botswana. They actually farm bushmasters and drought masters that have been brought in from Queensland. So there's quite an Australian connection here. The cover wherever you drive is called the Kalahari sand, but in some areas it's more fertile. But then sitting below the Kalahari sand is a layer of calcrete, 2 to 3 meters thick, and that acted as a buffer, chemical buffer. So it was a barrier to any expression of copper coming to the surface. So that's why we only ended up with a 28 ppm copper anomaly over that T3 project on the left-hand image there. And so people had done very wide-space soil sampling, say, oh, there can't be any copper here because we're not getting anything in the soil. And we know that that's what discovered all the other deposits up the eastern end of the belt. So these deposits came very close to surface. And then the other breakthrough really was flying airborne EM. And that detected numerous conductive domes, and I've just put a snapshot of 4 of them. These are cross sections across the domes. They're anything from 3 to 4 kilometers to maybe 8 kilometers long, and these are sections sliced across those domes. There's very conductive shale that sort of defines them, and you can actually see the internal structures within the domes. There's sort of shallow features there, particularly T3 is a good example, A1 another one. But all of these things are turning into open pittable mines, and then they will have potential at depth. Then just for geologists in the room, I don't know how I'm going on time. I should check that.
We're running a little short, but yeah, keep
Okay.
going. We've got another 5 minutes.
Okay. There was really several types of mineralization. This top right was a wonderful piece of work done by our chief Botswana geologist there, Karratha, let's saying his name is. But anyway, he just got old school and laid out, instead of going to the tablet and putting all the holes together, he just laid all the core out in the core yard, took the whole core yard over for a couple of weeks. Anyway, laid all these holes out side by side along about 1,200 meter. They've been drilled and found that there was an upper chalcopyrite layer. Below that was which was shear vein style. Then below that was high-grade bornite veins, the dark blue, and then below that was chalcocite, which is the high-octane copper product, which is extremely high grade and a valuable commodity in the copper world. And then another 200 meters below that was the traditional conventional sediment-hosted copper belt contact. They call it NPF contact, where you have red bed sandstones below it and you have shale sitting above that. So that is nearly always mineralized with the disseminated chalcocite occasionally getting into veins. So this sequence is not unfamiliar to people up in DRC or Zambia, and we see it here. But anyway, there were the sort of breakthroughs there. Artemis has got really two projects here, what we call a Karratha gold project, incredibly underexplored where we are. The slide here, every gold geologist, sooner or later, it doesn't matter where they are, they'll come back with the same sort of checklist. Are you near a major regional structure, something that runs for hundreds of kilometers, something that's tapped fluids from way down, or intrusions from in the Earth's crust? Major structural disruptions. You need disruptions to open things up, and then you need intrusions to sort of heat engines, I call them, but lots of other people view them differently as host rocks. And then you need favorable gold. So those four. So I'm just saying this North Pilbara area has it all. I think the Pilbara, and I'm a newcomer to it, has been a bit written off because once you're south of this dashed line on the right-hand side, the geology is completely different. You're into greenstone belts, which don't stack up very well with the Yilgarn Craton of Meekatharra to Wiluna to Kalgoorlie to that part of the world. So, but the geology north of that dotted line, or along that dotted line, has surprised everyone back in early 2020 with Hemi and Andy Beckwith gave that last presentation with a lot of detail here. Just a fabulous discovery, incredible, and just sort of threw the rule book away in a sense on, the Pilbara is no good for gold. So they've got about 100 Ks up that eastern end of the belt, completely dominated, and are well over, all over it, of course. And some of you might be invested in all of that. Artemis has a 20-kilometer long zone at the south, just south of Karratha, actually. It's surprisingly underexplored, so close to Karratha. We think partly because it's just dominated by the iron ore and the gas just up the road. Very little drilling outside of what we call the Carlo gold and copper project in the middle of that area. And there's just minimal drilling outside of it. There's a lot of surface gold. There's a lot of surface enrichment of gold here, but there's a lot of gold occurrences, and prospectors, of course, are wised up to all of that have never been drilled. So Artemis really owns a dominant position in that area just south of Karratha. The breakthrough for the Carlo has been a hole drilled in 2025, back in February, and which just changed everything, at least in our minds. That's the hole being drilled. In the background of that photograph, those Ranger Hills in the background are the Azure initially nickel discoveries, and then beyond that, further east, we're looking east, here. Beyond that are the Andover Intrusion hosted lithium deposits. And of course, there's been a presentation on that as well by Tony Rivera several months ago. A fantastic discovery. So we're west of that. The Andover Intrusion, always been assumed to terminate the Carlo resource. Those red dots, green dots, red, pink is high-grade gold. Green is high-grade copper. We've had to go all the way back to the resource data, through the resource data model, to understand what's happening in this area here. And anyway, good mapping at the surface showed that the Andover intrusion is probably flat lying, and it was. We drilled through it back in February, March, without trying, got straight into gold in the same host rock that hosts Carlo, 600 meters to the east of that. And anyway, that's opened that area up that we call the gap. And we'll soon be putting some holes in around that to see what's going on. And then the deepest hole, again, for high-grade gold, above 4 meters at 11 grams and 2% copper. Still only 450 odd, 500 meters just below the resource, nothing around it in the way of drilling. But importantly, that hole also intersected the yellow unit there, the regal thrust. It was chasing an EM anomaly, which is part of that regal thrust. And so the steep geology that we saw north of Carlo is flattened off to near sub-horizontal near. So we're seeing thrusting going on here. We're convinced of that over a sequence of sediments and ultramafic rocks that we've also found gold in at a place called Titan. And that's just opened up that potential. So, you know, we're pretty excited by that. This geology map, I think I'd have to ignore that, but I just want to give a snapshot of Titan, 2 k's west of the Carlo resource, along that same structural zone, highly disrupted area here, but fascinating. There's an outcrop of chert here. There's something like 4 or 5 different occurrences of chert and quartz veins sticking out of a paddock of no outcrop. And you can, by selectively sampling, I've got to be careful here, you can get very high grade gold values here as well, undrilled. So, you know, Titan is very high on our list just to start putting some RC traverses across there and see just what this thing might be. We think it's structurally very interesting, and in a bunch of sediments and ultramafic rocks we haven't seen before. Cassowary, John, are you happy for me to run on with this here? And
yeah, we got sort of 1 minute there, Julian.
1 minute, Cassowary. I'll save the best to last, okay? Might answer someone's question, I don't know. Cassowary, this is sort of frontier exploration. The grey thing in the middle is a mag image showing the Yilgarn Craton, the eastern boundary of that. Then you go into Tropicana gold deposit, which IGO and others have sort of discovered and turned into something really quite special. You have these major cratonic boundaries. Well, we're the third one out from the Craton, a thing called the Madura crustal boundary. We think we've stumbled onto something pretty interesting here. There's that on that blow up of that grey area in yellow are our tenements. In the middle in blue is WA1, and they've sort of picked, there was a bit of a land grab went on here back at end of last year when BHP Nickel West dropped all of their tenements along the spelt, and Rio had the northern part of it, and they dropped out of it as well. So we've got what we call the Cassowary intrusion. It's a cracking great intrusion. I haven't seen anything quite like this before. It's right on that crustal boundary. We think we're in a rift to geologists here. Rifts are always good for intrusions and mineralization of many types. And that intrusion seems to have disrupted everything around it big time. We can see it in the magnetics. It's under about 250 to 300 meters of flat-lying nullarbor sediments, nullarbor plain. We're in the middle of the nullarbor plain here. The only 2 drill holes are on the eastern side. They both picked up copper. Further east of us is something else, different style, but has gold and nickel and copper. So we're pretty excited by this opportunity. The model here, first model for us, and I think also disclosed by WA1, it is first shot here is IOCG style, iron oxide, copper, gold. To those who are very familiar with these deposits, Olympic Dam, and they showed up on John's chart of copper, below 400 meters of sediments, Karratha, just down the road 100 kilometers away, again on a major boundary structure here, cross-cutting faults, all the good things. You're looking for coincident magnetic and gravity anomalies. If you get that, and then you start drilling and you find red rocks in the bottom right-hand corner, I don't know if you can see my cursor, this piece of core here from Karratha. So these are pretty exciting times. Quick conclusions to all, please, here. Just take these however you like. But I've figured out that you can't stop geologists bouncing ideas off. It should always happen. It should always be encouraged. it's informal and it's the quickest way to understand what's really happening, and fast track towards discovery. And as I say, it can happen in the courtyard or the pub, all over the place. And company directors, I think, need to spend more time with their geologists, and because the geologists are living and breathing this stuff all the time. They don't usually follow any model. I think things like Flying Fox Mine at Forrestania in Western areas just didn't follow a model. Didn't matter at the end of the day. No one even talked about the model after a while. It just figured it out. And structure trumps everything in my books. I don't know why, but most mines going back, and I've been involved in some shape or form, are associated with shallow thrust, 30 degrees or shallower. And others might be nodding their head or saying, "Oh, that's just rubbish." I don't know. But Sandfire taught me that if you're heading towards development, don't skimp with infill drilling and met test work, makes or breaks. You should take every opportunity to visit a mine or a processing plant. I think the guys in smelters particularly really understand the metal industry better than anyone. They are the customer. They know what they need and when they need it. Metal prices are headed, well, no idea on that one. I'll leave it there if that's okay, John.
Julian, absolutely brilliant. Thank you very much. I think we are out of time on the Q&A front. Unfortunately, we will take those questions that we've had come in and try and get back to the people who've asked them individually. But Julian, yeah, thank you very much. We're just going to put up a quick poll for attendees. Thank you everyone for watching. Once again, the next webinar, first Friday in October at a different time, 10 a.m. Melbourne time, Australian Eastern Standard Time. Thank you once again, Julian. Just jotted down a few things. Boards need to stay close to their exploration teams. Informal discussions by geologists are the quickest way to a mine. Having a cornerstone investor is extremely handy. It seems like if you name your targets starting with T, you're going to be have a good head start. And also EM seems to be a pretty powerful tool that has helped in a number of these discoveries. But
John, can I just interrupt 1 minute? If you end up with a list of let's say T1 to T10, drill T3 first every time. I don't know why, but T3 is the lucky one, definitely.
Name your favorite target, T3. Good. All right. Once again, a brilliant presentation, some fantastic insights into Julian Hanna's lifetime of discovery. And yeah, thank you to all who've participated.